Alright, hey guys, how you guys doing today? Good? Yeah. Okay, well today we're going to be talking about insurance, as you can see.
So what is insurance? Today we're going to tell you a bit about what it is, like why we need it, the different types, and then what to consider when buying insurance, and then a couple activities.
Okay, so first we're going to do a think, pair, share. You guys are going to talk at your tables and discuss what insurance is and why do you think it's a good investment, why do you think you need it.
And while you guys are talking, I'm going to pass around some suckers, but
Don't eat them yet.
Don't eat them. Just grab one.
Just, it's right after the think, pair, share.
Delayed gratification.
Alright, go ahead and talk.
I know insurance is important to have. One time I went on a trip, I dislocated my elbow, and I was far from home, and if I didn't have insurance, that would have been real costly, and I had a trip to the emergency room, and that was 5 years ago. Luckily, I had insurance back then.
Yeah, it's crazy to see like the prices of something like that, because I mean, you still, oh god, going to the emergency room alone would cost like $5 grand. Yeah, it's ridiculous.
Just grab one. Kyle, for you.
We didn't copy that.
Sucks for you.
Oh, look!
I don't know, you do.
I'll trade you. Wait.
Don't ruin it. Yeah, whatever you want, whatever flavor.
Is blue good?
Yeah.
It's already brown. You do need one.
Okay, did everyone get one? Yeah? Yeah, okay. So does anyone want to share what you and your table talked about?
So it's very important to have because, say, for health insurance, you could end up just paying cash out of your pocket if something happens. Like an emergency.
Yeah, we're going to be talking about that. That's good. Anyone else?
Just to kind of add to that, just to freak everybody out about not having health insurance. I had a friend who had her appendix taken out without insurance. It is an like it's something she'll be paying on, like
Oh yeah, I bet.
like I mean, well into her career.
Yeah, especially since surgeries cost so much.
I had my best friend's daughter-in-law just had cochlear implants, and with insurance for both, for like 1 ear, he got them in both ears, but just for 1 ear, it's $80,000, and that's with insurance. So it's like $160,000 for cochlear implants with insurance. So imagine if he didn't have insurance, how much he would have.
A lot more. Anyone else want to share anything?
I kind of just talked about how insurance is like cover your ass type thing.
Yeah. Pretty much. Pretty much. Alright, awesome.
Oh no, your house is on fire. But first, let me take a selfie. Sorry, your house is on fire. Those with blue suckers are covered. You have insurance. Yay!
So the guys with pink ones, you guys gotta give
your suckers back.
Oh, you'll get them back again. I guarantee it.
I have a pink solid.
You have to give it back.
I have to give it back.
Yeah, you guys can.
Wait, so if you had blue, can you eat yours? Kenzie, if we have blue, can you eat it?
Collect your debts you cannot pay. Sorry, guys.
Sorry, guys. I just got to enjoy this right now.
My house is on fire.
Okay, so what is insurance? It provides financial protection for your uncertain future, and it can also be linked to probability because insurance companies determine whether they want to insure you or not by what type of risk you are. So depending on what type of risk you are, they exchange it for a premium, and then hence you're insured. So I'm going to throw out a little analogy for you guys. What if risk was defined as a smoldering coal that could spread into a fire at any point in time? In this case, a fire extinguisher would be your insurance, because insurance is like a security blanket to help you with all the bumps in the road along your future in finances. So just, just think about that. Think about it that way.
Okay, we're going to take you to a website. It's called ohioinsurance.org. It'll grow. And it's a really nice website for teachers and students. There's different activities. It has a lot of information about insurance in Ohio. There's informational, like teachers, speakers, facts, resources, anything you probably would need. So if you're teaching a class and you want them to understand insurance in Ohio, then there's different activities they can do, different things they can look at, and all sorts of good fun stuff.
Also for teachers, there's good lesson plans on there, like the ones we looked at the other day for teaching insurance. So it's a good resource to use
For games and stuff.
Yeah. Like we were gonna include this game, but we just felt like it's back. So what is insurance and why we need it? We're gonna watch a couple videos. The first one is from a financial advisor, and he's going to talk about his point of view of insurance, why people need it, and then we're going to watch some kids explaining what insurance means to them.
Yeah. Are you saying a different one?
Yeah.
Well, I need the link. Sorry, guys.
It's because the internet explored.
Hi, my name is Chris Koshman from Herod Financial Services. One of the questions we often get from clients is, what is insurance and why do I need it? Insurance is a financial tool that's designed to protect you and your family from a catastrophic, life-altering event. These could be things like a death, a disability, or a critical illness. Let me ask you this. What would you do if you died on the way home from work today? How would your family survive? How would they look after their bills? What if you just found out that you were diagnosed with cancer and found out that you had to take time off work and spend all this money to be able to get back to your former self? To determine the proper amount of insurance, you need to meet with your insurance professional who will complete an insurance needs analysis. This incorporates things like earnings replacement, debt repayment, and looking after your loved ones after you're gone. To meet with me, please contact me at Herod.
We don't need to. So basically you're just saying, insurance is a really good thing to have, just, to ensure your future, ensure that your family's taken care of if, you unfortunately leave them behind. It's just a really good safeguarding thing to have in your life. Okay, it's not going to work.
You got it.
WDesk is the only complete solution dedicated to meeting your reporting requirements, from document drafting.
Kids, explain insurance.
Insurance is like when you have an accident and they would pay for it. If something bad happens to you or you need to pay for something, the insurance will help pay for it. There's house insurance, pet insurance, car insurance. I don't know everything about insurance, and I'm not an expert either. So you should just call Al.
Al Torstrick Insurance.
I'm not gonna call him either, but
Yeah.
So yeah, that's just a little interesting tidbit for you guys. There you go. Okay, so some history on insurance. It was first dated back to the Babylonians with the Hammurabi Code. And so if a merchant received a loan for his shipment, the guy who was doing the shipment would pay the lender like a fee. So for exchange for the lender's loan, he would cancel the loan if the ship was stolen or replaced. So that's kind of when like a premium came into play.
And then in the Dark Ages or Middle Ages, you would belong to a guild, and that correlated to your trade. Your money for membership of the guild would go into something called a coffer, and it was a store of money in case of things like disaster, theft, injury, or death. If that would happen, you'd be given the money from the coffers to cover what you lost.
And then like in the 17th century, it progressed into the riskier the ship ventures became, the higher the loaners would raise their premium. And then it became more expensive, more risky, and less risky, so that would depend on how much the premiums would be.
And actually insurance in America wasn't even relatively established until after 100 years after it was established in other countries like Europe and places over there. So the four types most of you probably think of when I say insurance probably be the home, auto, life insurance, and health insurance. But you can also buy insurance for your business, your apartment, your boat, traveler's insurance. If you have items of high value such as jewelry, you can have insurance to cover those, and then you can even insure your pets.
Premiums are the amount of money that you pay to the company to insure you each month, and every premium is different. Everyone's premium in here would be different because the insurance companies take into a lot of consideration in regarding to their premiums, like if they're male or female, their age, what assets they have, what type of risk they are, and that kind of stuff.
So risk is the meaning of possibility of financial loss, or how risky you are, I guess, with your life. There's different types of risk. There's high, medium, and low. High risk professional, like professions such as being a firefighter or a miner, put you at high risk. Hobbies like skydiving, racing cars, scuba diving makes you a high risk customer. If you smoke or chew tobacco, and then if you have predispositions or diseases such as diabetes, epilepsy, or cancer, it'll put you in the bracket of a high risk. For insurance, then you have to pay a higher premium the higher your risk is. Medium risk is usually people with professions or hobbies where you can get injured, but you're not necessarily going to as likely to die as someone with a high risk. And then low risk, you're less likely to cause harm or harm yourself. The higher the risk, the higher the premium.
So now we're gonna. Yeah.
Can I ask an example? When you say low risk, can you give us an example of somebody that might have a low risk job?
Maybe someone who's an elderly person who maybe doesn't drive and they live, but they don't have a lot of like they're not sick and they're like my great grandma. She's 104. She lives by herself. She doesn't drive, but she's never been sick. She doesn't get sick, and she just lives alone.
Now we're gonna go into talking about like the four main insurances that most people go in and invest in. The first one's auto insurance, and basically a company will help protect you from major losses due to accidents or other things that would happen to your car. And it basically covers repairs to vehicles and medical costs due to accidents. And their premiums are based on age, gender, years of experience driving, and your accident and moving violation history. Like for example, when I had my learner's permit, I got into an accident in a parking lot when I was learning how to drive, and our insurance went up because I wasn't a licensed driver, and since I was learning, it was my fault, and so the insurance went up. Parents weren't technically nice about it. I wasn't allowed to drive for a little bit, but and most auto insurances have a 25-50-25 rule, where they will pay a maximum of $25,000 for a bodily injury to one person in an accident, and then $50,000 maximum for a bodily injury with more than one person, and then a maximum of $25,000 for property damage in an accident. And you can also get insurances on like subcategories like collision, medical payments, towing, and comprehensive factors that don't include collisions, like say your car catches on fire, your car floods, it's vandalized, or it's stolen, so you can get coverage on that too. And there's also such thing as a no-fault state. Ohio is not one of them, but that means that if two cars get into an accident, one car pays for their damage and the other car pays for their damage. But in Ohio, you both have to exchange information, you know, and if one's at fault, then they have to pay for that.
This is a chart of the average premiums in 2015 for Ohio. Ohio is traditionally one of the lower premiums. And then if you have a really expensive car, like a Mercedes-Benz, your premiums could be higher because it would obviously cost more to get it fixed or replace it than it would to like Toyota, Subaru.
And then with all the insurance options that we're going to be talking about today, there's going to be some advantages and disadvantages. Some advantages for having car insurance is your medical bills after an accident will most likely be covered. You're going to be shielded from costly damages that you would not have to pay out of your pocket, because those could add up and those could amount up to a lot if you did not have protection and insurance. And so, like I said, the repairs would be covered in most cases. And some disadvantages is the costs on cars can get expensive depending on what kind of car you drive and if you have insurance or not. And some fine print on companies include things that you might not necessarily notice when you're going over like contract agreements and stuff, so make sure that you and your insurance company are on the same page and you know what's going on and all that stuff, and make sure you know if your premium goes up, because not all insurance companies tell you, so you have to make sure that you're on the same page and make sure how and when you're going to be notified if your premium does go up.
Life insurance. Life insurance can be used to pay for what we owe when we die. The money is usually given to family or loved ones, or if you have a guardianship over your assets. There are two types of life insurance. There's term life insurance, which covers you for a period of time, such as like 25 years. Usually the premiums are lower for that because it's not as long of a time. And then whole life insurance covers you until you die, as long as you keep paying your premiums. And then when buying life insurance, you need to consider who will have to take care of your assets when you're gone. And then when deciding, you need to factor in like maybe the amount of debt you've accumulated, the cost of your home, if you still have a mortgage, cost of the funeral, everything. If you have an illness, the cost of all your medical bills when you finally pass away. Advantages of having life insurance: flexible when it comes to adjusting policies. There's death benefits. If you have a terminal illness and you know that you're going to pass away, sometimes they will give you money ahead of time to take care of medical bills. And then premiums can be reduced, skipped, or increased depending on your financial stability. Disadvantages they're confusing when you're going through the acquisition, which is basically the process of buying life insurance or any kind of insurance. And then last year, Edward Cullen, everyone needs insurance. Life insurance.
Who's Edward Cullen?
He's from Twilight. He's a vampire.
He's a vampire.
Oh.
He lives forever. You didn't
Okay.
let them read it.
Oh.
Is that the Twilight guy?
Yeah.
I totally did.
Okay, sorry.
It's the joke. Yeah, he's immortal, so unless you're ever Cullen, you're gonna need life insurance.
Gotcha. Now I get it. Okay.
Health insurance, as we saw in the quiz today, it's one of the most important insurances that you should invest in. So it's going to help pay for health care, and it protects you from paying full costs of the high health bills that today's day and age provides us with. And it's going to help you pay for things like checkups at a doctor, dental visits, eye care, things like that. And by paying the premium, the health insurer promises to help cover a portion of the medical costs, so you're not paying out of your pocket. And you're not paying as much as you would if you did not have insurance. Some advantages: you get a peace of mind because you're going to be covered. You're not going to have to pay the outrageous bills that you're probably going to get. You're covered on your health care insurance, your health care bills, and your financial future is protected. And some disadvantages: the medical expenses could be out of pocket if you do not have insurance, and those are going to build up. Premiums tend to be a little higher with health insurance because it's one of the most important ones. And the policies can get confusing with their lengthy and wordy disclaimers. So again, make sure your insurance company and you are on the same page. Ask them questions. Make sure that you know what's going on, so you know what's up.
Homeowners insurance protects your home in case of damages or destruction, and then it can also replace the valuable lost items that are destroyed in like a fire, flood, or other disasters. You need to estimate what it would cost to completely rebuild your home when deciding on the sum you're insured for, and you can't factor in what you paid for your house or how much it costs to originally build your house, because the cost of building goes up every year because of inflation. So you need, it fluctuates, and you can, so your premiums, you can revise it so that when your premiums will probably go up because you need to basically revise your insurance when your as the cost of building a house goes up. Also covered under homeowners insurance, like driveways, retainer walls, and pools are covered. So if the concrete in your pool cracks, homeowners insurance will cover to fix it. Advantages: it gives you money to replace your house, and gives you money for loss or damaged belongings. If you take that, you can also list things like that under your home insurance. Your coverage depends on the sum you've estimated, so if you haven't redone it, or redid it in a while, and the cost of building your home is less than what you're covered for, then you have to pay out of pocket the rest of the amount to basically rebuild your house. And then it does not cover the land your house sits on. So if your property gets damaged, not necessarily your house, you have to pay for that.
So some things to consider when you're going out looking for insurance and stuff. You have to take into consideration how much risk you assume daily. Like it's uncertain, but that needs to be taken into account so you know if it's suitable for you to invest in or not.
For example, me personally, television followed me, and I probably shared this in class, and I broke my right thumb. It cost $30,000 in medical expenses, and luckily the insurance that was available where I was injured, and then our own insurance covered all of that, so my parents only had to pay the deductible for the insurance. But if not, that's a year's tuition at school, that's a new car, like down payment for a lot of things, $30,000. So no one wants to be paying it out of pocket. You also need to take into consideration how much you can afford to pay each month,
because you need to be able to make your payments, you need to be able to make them on time, because if you miss payments, some insurance companies totally close out your coverage, and your coverage then becomes inactive, and they'll notify you by mail or email, however they do it, that your coverage is not active and that you're going to have to pay your own way until you make another payment. So you have to make sure to know your insurance company's policy with that. And you should always shop around and look to see which carrier is right for you. Go and compare prices. Don't go necessarily with the first one that you see, like on TV or in an ad on the internet or anything. You also have to take into consideration if they record claims and process them accurately, because some insurance companies aren't really good at doing that, and that's probably the lower end insurance companies.
Also keep in mind, insurance is expensive, but it's cheaper than having to pay out of pocket for the most part. Insurance in most cases will be a monthly charge for premiums. If you like drive fast and you get a ticket, your premium could go up for your auto insurance. If you're accident prone, like myself, and you end up in the hospital a lot, that can also cause your premium to go up for your insurance. A lot of employees offer insurance benefits, such as like dental or eye doctor visits. There's also co-op pays. Instead of you paying for the whole visit, they pay for all of it, or you just pay a percentage of it.
Yeah, my mom recently just switched over our health care with her work. She works for Cleveland Clinic. She's a nurse there. And so now we get our health care through Cleveland Clinic. So that's just an example of employers offering insurance for their employees.
Make sure you shop around and look at multiple companies. Don't just go with like Progressive because you like Flo, which is funny, or don't like.
Or go with Geico for like the lizard.
Gecko.
Sorry.
And we have a game for you guys.
Yeah, now we're going to do a game. I sent the link through Canvas. It's called the car insurance dice game. And it's basically just, it has a sound. You don't have to listen to it. You can just turn the sound off. The instructions are right there. You can just read them. I don't know why it says it out loud, but. And all of you that had to give your sucker back, you can get a sucker now. But this game is going to show you how important it is to have car insurance, because it's going to give you a bunch of scenarios on accidents that you've gotten into, and then shows you what you're going to pay if you have insurance based on like your age, your gender, and whether you have insurance or not. So it's a pretty good game to play in a classroom with your students to teach them the benefits of having car insurance.
Thank you.
Does anyone else want another one?
We have extras.
Yeah. Just like it's here.
But make sure you leave one for us.
I have a lot more to Are you being selective over here?
Wait, Kenzie, we need one. I want one.
You just really toss me one. You don't have to walk over here.
What color do you want? Blue, brown, red.
Red.
DJ, would you like one?
Oh, you got it.
Yeah.
No?
You just give
All these math people out there giving probabilities.
Which insurance is based off of probability. Go with it. It's really going to tell me. I think that one is 20.
Female, age 72.
And $1,800. For like the next.
Oh yeah. You pick an age and a gender, and then it gives you scenarios. So, 72-year-old female who does not have like accidents or traffic violations. So based on that age, her premiums are $800. And then the dollar amount after she pays her premiums is $3,200. So you roll the dice.
Okay. I don't know. It's not tough.
And then it gives you a scenario. She, during a snowstorm, she wasn't driving her vehicle unless it was space. So then, since she has insurance, she had to pay the deductible, which was $500.
Okay.
And then if she didn't have insurance, she would have had to pay $500.
I have one
We get somebody working in the car and still switch there.
It just has like real life scenarios and then it would show how much it would pay if you have insurance and how much.
That's not worth it to do that anymore because of the code.
She's texting you.
Of course, it's supposed to be mom, a terrible driver.
Wait, what? Why are you
She doesn't text. She's 70.
I got the bill wrong. What did you get?
My dad texted me and he just got an iPhone, so now he uses the voice thing. I was like, stop.
Yeah.
14 or 15.
You said the highest. Did you stop?
I really do.
She's so funny.
I always go through and at least read the terms because I'm always on.
I'm sorry. I really looked proud.
It's so unnecessary. They're everywhere.
They are very small.
My aunt said it's to her granddaughter. And she texts all the time. They go back and forth.
Yeah.
Oh my gosh. I don't think I know. I don't even do a guardrail. I'm 65.
That's what I did too.
Yeah. Oh my God.
I hope my dad is not.
I do
driving.
I was going to driving. And then I think a tree fell on my car.
I hit a mailbox.
Just ready to sell their cars.
Oh, yeah.
They have this like free testing apps every
Yeah. Okay.
So she was school shooting in Columbus.
Oh yeah, it's bad.
Really?
For real.
Oh yeah. How much do you have? 3,500.
Wow.
So how you guys turning out?
1,800.
Well, anybody broke yet?
Anyone broke?
I was broke.
Second.
Oh gosh.
Did everyone get a thumbs up?
Oh, Stipples didn't say. He did say.
I literally could not find 1% for insurance.
So being a brat.
Nobody else.
A 22-year-old male.
Well, that's
There you
Who's
go.
the most expensive person to
You
insure?
guys go back.
That's what I want to know.
I feel like young males.
Males are way more expensive.
Or the caregivers.
I should show you right there.
Yeah, I actually was. It was in my driveway.
So, wait, were you with your mom or something?
No, I was with my brother who was 3, and we were paying my dad's truck. We lived on a very steep hill.
Yeah.
And my brother turned into a receiver and got short and started coming down the hill.
It was one of the first.
Oh no.
Yeah, it was one of the first times I went out, and my mom took me into like the busiest parking lot in my town, and I got really scared, and I just slammed on the brake, and
Who is the
ran
most
into the
expensive person to insure?
footballers on their cars.
No, to insure, not drive.
Oh,
Yeah, probably did that to you.
probably did.
16-year-old boys.
Keep going.
It has to be teenage boys. That's what I said.
I'm thinking.
I would have to say it would have to be like
15, 16
16-year-old boy.
Yeah.
My brother hasn't had his license for a year and he's already
why
got
does
an
it keep doing
accident,
that?
so.
My brother just got his license 2 weeks ago. His insurance payment is so
The motorcycles, for some reason I just like don't see that. And I'm like, holy crap, there's a motorcycle right there.
It does. It just automatically.
Every time I do
12. No, I'm so sorry.
There we go. My part.
break, what are you doing? There's a person.
First of all, he's a never have taken his son.
Never have.
Yeah.
Yeah.
I am $900.
No, stop.
I'm almost finished.
Hence why our auto insurance went up when I got it. I feel like it's 50 again.
That's not for like,
I celebrated when I turned 25 because it was supposed to go down.
I don't think so.
it goes down to 25 and then we'll get married.
It was supposed to go down at 25, but all insurance rates went up. So mine stayed the same.
temperature for a second.
I was so excited to be 25 because I thought it was going to save money. I was also excited that my kids got out of diapers, out of formula, and out of daycare.
My mom's all excited because I didn't get my grades, so that was,
Yeah, absolutely.
Thanks, guys, for listening to our